The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 15th fantastic Friday edition of the Nadex Bull Bear Binary Option Hour. I'm your host, Steve Rhodes, today. That's because my co-hosts, they're traveling out to the San Mateo, California area. I believe they're both on a plane just about right now, Darrell Martin and Tom O'Brien. And, folks, if you are anywhere near that San Mateo area, make sure that you come to the homepage of TFNN.com. It is not too late to sign up for what's going to be an incredible education. That's tomorrow morning from 8:30 to 12 noon. All the details on the homepage at TFNN.com. All kinds of great prizes as well. You're talking about subscriptions to newsletters, your silver, Darrell's diagnostic trading system. I mean, and it's all sponsored by Nadex. What a great way to spend a Saturday morning. Again, all the details on the homepage of TFNN.com. So you've got me for the hour here. Our call number is 877-927-6648. Let's jump right in and take a look at these markets out here. Right now, we've got the Dow trading off about 64 points. The S&P down 7. NASDAQ off 14. Russell 2000, not too bad. It's down it's starting to join in, off 3 points right now. New York Stock Exchange off 0.3%, down 35 as well. Let's first dig under the covers, then we'll go take a look at the indexes out here. And by digging under the covers, we're taking a look at the ES Mini. Taking a look at the move down, quite a decent volume in that 10 o'clock session. I don't know really what was behind the move here. I mean, news-wise, you had the Michigan consumer sentiment decreased to 71.8 in March from 77.6. Maybe that started maybe that's some of the fuel behind the fire. And but now what we can see here on the 30-minute chart, actually the ES Mini here forming a 0.618 or 0.786 Gartley buy pattern. Now, if we take a look at the A to B equals CD down, our A point on here is going to be the swing point high. Came in at 3 o'clock this morning, a little doji candle. So on the 30-minute chart, we had a little reversal signal for sure. That high out there was 1558.75. That's your A point. Your B point is the low that came in at 6:30 this morning. That was at the price low of 1554 even Steven. Makes a retracement. If we take a look at the retracement out here, that retracement looks like a normal Fibonacci retracement. Sweet 618 it is. The sweet 618, 1557. What did it actually get up to? 1557.25. So now that formed our C point, the 1-to-1. And take a look at how the ES Mini moved off of that C point with some conviction, some wide-ranging bars. Certainly as we take a look at that 30-minute chart, that last 9:30 to 10 o'clock session out here. Now where it so far has pulled back to the actual 0.618 level is 1548.50. What it did was so far got down to 1549. So that's you can say that the 618 level has been attained here. But what would be concerned, I wouldn't step in here just yet as a bull, even though you've got a 0.618 Gartley buy pattern. I would wait for a bullish candle. And the reason that I would really wait is when you take a look at this move off of this C to D leg, very powerful. So you know it's going to do more than a 1-to-1. It's already done the 1.618 A to B equals CD. And if you actually owned the book, The Art of Timing the Trade, what you would know is when you do a 1-to-1.618 A to B equals CD, oftentimes you're going to do something different. Well, in this case here, because of the power of that move off that C to D leg, says you have to be cautious here. Not sure whether the work is done to the downside. Most certainly, we can see here that the market here in the ES Minis moved down into that oversold territory. I'm just simply using the simple relative strength indicator out here. And the last time, if you were looking to buy If you were looking to buy dips out here, boy, what a tool this would be for you to be able to put in your arsenal. Last time you had the RSI down here was back at 8 o'clock in the morning on the 13th, March the 13th out here, and then you got that little bullish engulfing candle and that following session at 8:30. And so that's, that was your signal out there. I would really use the same out here. So what are you really looking for? Well, on the 30-minute chart, you'd like to see a small-bodied candle finish coming into 10:30, and then you'd like to see the wraparound. You'd like to see, sounds like we should make that a dance out there, and maybe the wraparound is a dance for all I know. And then you'd like to see a bullish candle confirmed for you. Then that might make a nice intraday trade out there. Let's go to David in Clearwater, just down the street. David, thanks for calling. Thanks for holding. How are you doing this morning?
It's a fantastic Friday, Steve. How are you doing?
It is fantastic Friday. Doing great. Thanks for asking. You wanted to take a look at the S&P E-minis. Tell me how I can help you.
You already did on the opening monologue because I've got the live feed going here, and I've been listening to the show this morning. And as you know, I am a Mastering Probabilities customer, and I'm finding that the whole price divergency RSI setup is working quite nice. And if you had it yesterday, brother, it is payday today. Payday.
Oh, yes. Yeah, so, absolutely.
Do you think
it is? It's a great tool to have in your tool bag, no question about it.
Oh, are you kidding me? No, it's not a great. It's the whole trading methodology is a great thing to have. That is an especially sweet indicator. Question for you, because you pretty much, in your opening monologue said what I was going to, mention, because, during the break or in the last couple minutes of the show, I mean, some big operator just came in and sold heavy. I mean, if you look at it, Steve, within 10 minutes, 250,000 contracts sold within 10 minutes. I mean, that is one day's worth of volume. So I guess my larger question might be, because, we've been on a steady, low volume uptrend here for several days now, considering with the substantial move we've had off the dollar starting in February 1, you think might quite possibly, if lower price holds today, this might be the shot, because, we got a butterfly sell. This thing is extended. It's an outlier event. Just thinking from a longer term point of view, you think this might be the beginning of the move down?
The thing is that so we're going to find out right now, because for those the indicators that we use, plenty of technical traders use them as well out there, and so in taking a look at, for example, just buying the futures here and being able to buy the dips, we're going to find out very soon here, probably during this 10 to 11 o'clock show, or maybe during Basil's show, whether or not the buying of the dips is still in play here. So it's setting up for that, at least to be able to release that information to us. So I think that's going to be one of the things to take a look at. I think on the index futures, as you know, yesterday we went ahead and took a short position, really right as the ES Mini was cracking right into the lows of October of 2007 out there. And so the question's going to be, if the ES Mini closes above 1556.25 today, then the market wants higher prices. The SPYs will want to go tag their high. The S&P cash will want to go tag its high out there. And so we'll just simply have to, pay attention to that. Now, on the S&P, so we've already gotten a test of the swing point low from the ES Mini perspective, but I really think it's coming back to the actual index, the S&P cash, because, so far today hasn't actually even formed a bearish reversal candlestick just yet. If it does close below 1554.52, that's the first number that people should write on their screen, 1554, or on their pad. I don't know if you write it on a screen, but 1554.42, you'd set up a bearish engulfing. Now, it hasn't formed that candle since back in February 20th, to be specific. But for me, David, I would, if it still closes above the 1546.72 level, it's still within inside the swing point. The S&P would still be within inside the swing point. And I wouldn't say that this necessarily is the cue to go ahead and take the short. I would rather pay more for more information. I mean, we always pay for information, whether it's education or anything that you're trying to get on the if you're trying to understand what your competitors are doing in a marketplace. In this case here, it's the bulls and the bears. You're trying to understand what everybody's doing. I think the real key here that I have maintained for a while is that 1546.72 number. You get a close below that, and then that becomes a selling opportunity for sure. If the market just pulls back to 1550 and doesn't break that area and holds, it actually becomes, in my opinion, maybe a buying opportunity until the S&P proves otherwise, and proving otherwise is that close below 1546.72. The currency side of the trades out there, I think you have to just trade those irrespective, because there's no connection at the moment between what's going on inside the U.S. dollar and the market, and there's divergence with regard to the euro-yen, which is really, that's the key currency pair for paying attention to the direction of the markets out here. So that's kind of how I'm mentally trading this. Intraday, it's a different story, but that's how I'm mentally trading the larger picture.
From a large, basically on looking at the daily chart moving. So you're saying below 15. Basically what you're saying is we have bearish engulfing today. That would be our first shot across the bow, so to speak. And then
it would,
it would. Okay, and then so one thing. Sorry, my phone signal scrambled for a second there. So it closed below 1546. Basically bearish engulfing today. And then what would you say? Did you say a minute ago to support it? 1540. I closed above 15. What was it?
Well, 1546 is the key number. 1546.72. If you get it closed below that because the volume to the upside has been weak, that would be your reversal signal. That would at least be where your back is up against the wall, and that would be the place where you would go ahead and take a short trade. I will say this, and I'll say it on the air. If the S&P closes below 1546.72, I'll be short on a longer term trade out there. Doesn't mean that it won't get followed through and be rejected again, on Monday or what have you. But to me,
no doubt.
that would be the bearish signal, of a pullback. And the pullback would be nothing more than getting back to the February 26th swing point. Forget about right now, January 1st and December 31st out there, or January 2nd, I should say. But it would really be what happens at around February 26th out there. But it's got to crack that 1546.72. If it doesn't crack 1546.72, comes back there and tests it, and it's on lighter volume, it actually may be a little bit of a short-term buying opportunity.
That's what I was thinking because, just going back to the February 26th, swing point, Steve, we're talking the low of that bar is 1487, so let's just say that's, 56.13, that's a $69, close to $70 move.
Yeah.
On the S&P, and it could very well come in with lighter volume reject because there's in my opinion, at any rate, a overwhelming but unjustified bullish sentiment, and in my mind, this is a bit of an outlier to have these many days straight up where it just crawls on a continual basis.
Now the other thing. Yeah, the other thing to add to that equation here, David, I'll get to just before we go to break here, the New York Stock Exchange, which is actually, of all of the indexes out there, in my opinion, that's showing more weakness. That is not showing a bearish candle today. It's just got a bear harami, which is nothing more than a timeout. So I'm also watching the New York Stock Exchange to see what, in fact, the breadth of the market is really doing. And right now, that's not giving a reversal signal at all.
Thank you. Appreciate it.
Hey, you bet. Thanks for calling. Have a great Friday, great weekend. Look forward to speaking to you again. Dow is off 51. S&P's down 5, almost 6. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour. Our man Tom O'Brien and Darrell Martin, both of our men, on their en route to San Francisco, and then a quick drive over to San Mateo for tomorrow's workshop. Again, folks, all the details on the homepage of TFNN. Dynamic trading strategies. Will be a dynamic time for sure to spend a Saturday morning. So no more procrastination. Go to the homepage at TFNN.com. Sign up for it. If I was trading the Nadex system live right now, I'd be looking for a long trade in the ES Mini. I've come down to a 10-minute chart out here. We were on the phone earlier with David from just down the street in Clearwater. If we take a look at candle formation, retracement formation, using the relative strength indicator, real easy trade to actually place right now. If we take a look at the 10-minute chart, that's where I'm down at right now. We can see the retracement. Well, number one, let's take a look at the number of patterns here that are completing, and then the signals, bullish or bearish. So let's go ahead and draw the let's draw the A to B equals CD. Makes a 1 to 1.618. A to B equals CD. So we see that pattern here if you're watching on Tiger TV. And if you're just listening on the radio or your mobile device at TFNN.mobi, remember this show will stream live to you on your smartphone device. Just simply go to the homepage at TFNN.com, click on the button over on the right-hand side with the 3 smartphones, and this show will stream live, or pick up the archive of this show on Channel 10. Now what it's also done, I'll go ahead and color in the pattern because I got a little coloring book tool out here. So it's like these are my Crayola crayons, and my Crayola crayons allow me to go ahead and draw this in. It's a .618 Gartley buy pattern. Now it's a Gartley buy pattern in the ES Mini. You got to be careful on this right now, but the trade actually setting up right now to go ahead and take a long position, and it's real easy. What happened here? Take a look at this wide-ranging bar here on the 10-minute chart on the way down. That is coming into the 10 o'clock session. Now, this candle right here, this body candle, it's called a harami candle. So it is it's not a reversal signal. It's a bull harami. It just means, okay, it's a timeout. It's that next candle, though. That's the beauty. This next candle on the 10-minute chart, that's the hammer candle. And so with that being the hammer candle, says your support here is now the low at 10:10 a.m. out at 15:49. You can see, relative strength indicator being down at the bottom. But here's where you would take a trade, a long intraday trade out here. The Nadex platform would be the ideal platform for this trade here because what Darrell would be able to do in just and he'll teach you. What he would be able to do in just a moment's time is do the scans of all the risk-reward trade opportunities that are out there, and so you want to be able to take advantage of that system that he offers to you as well. Now what we're getting with regard to this candle out here, you're getting the soldiers, in fact, have shown up. We'll see how this closes here in the next 3 minutes. But these three candles, if you string them together, you have a three soldiers candle or set of candles out there, so the soldiers have come to work. Now, the key here is going to be this wide-ranging bar. The real key that you're in the proper trade is going to be price moving above. This is a 10-minute chart, so you would be making the trade based on the 10-minute chart out here, but this would be showing you a close above the open at 10 o'clock, which was the 1554 price level. That would say, okay, you do have the wind at your back. You've planted your sail properly. You've let circumstances be your wind and just take a trade from there. Now, on any type of Gartley pattern that you're looking for, let's go ahead and erase some of the lines out here, make it a little bit easier. I'm going to go ahead and, in fact, I'm going to erase all of these lines out here. Now, a normal retracement of any Gartley pattern, doesn't matter what time frame it is you trade, is going to be a .618 retracement. What we can see here so far, and we're going to take a look at coming from the high that came in at 250, and we're looking at 10-minute bars out here. So at 2:50 a.m. this morning, you had the ES Mini trade up to the 1558.75. From that high down to the low that was put in here on this bullish harami candle, that low at 1549, even Steven out there. What we can see here is that we've had a bounce, a dead cat bounce to the .382 level. So that is a minimum that you would get out of any trade out here. And here's where we're going to, so you got the hammer candle. Now, that means the hammer candle low. In this case here, I'm going to use the actual low for support is going to be the 1549 level. A close below 1549, if you're long, you're wrong. It just means you take a small loss and wait for the next pattern to set up here. But right now, what the market has done, it's made that .382 retracement on the intraday chart. Now what's that mean it should do? Maybe back off a little bit or what have you, and then make a mounting charge for the 618 level, 1555. That level gets busted. The next level up here is going to be 100% move of a move, 1556. That most certainly is where you're going to have your fashion seatbelt sign come on, at least if I'm your pilot. 877-927-6648. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour. We're watching live the fight between the Bulls and the Bears. That is a beautiful thing. An even more beautiful thing would be tomorrow at 8:30 to 12 noon in San Mateo, California. A beautiful workshop sponsored by Nadex Dynamic Trading Strategies, hosted by Tom O'Brien and Darrell Martin. So all the details on the homepage of TFNN.com. You may say, hey, Steve-O, I don't trade the ES Mini. I don't have a feed for the ES Mini. I didn't want to pay the exchange fee. So how do I trade this? And taking a look at the SPYs out here. A little bit more difficult, but still a doable thing. Let's go to the SPY chart on the 10-minute. We can go see where the bulls are hanging out on the 10-minute chart out here. We got the hammer candle. We got Stevie's hammer candle, just one of the reversal signals. That coming in here at 10:10 a.m. That's this candle formation right here. You get confirmation on the next move out there, and that was your reversal. You know, you've got you're trying to buy. You always want to be able to, in my opinion, you want to be buying from the low of that relative strength area. And you want to, the key is no matter what trading strategy system that you use out there, you want to make sure that you're able to read the message of the markets. You want to make sure, and there's nothing better than using candlesticks as one of those elements to be able to read the message of the markets out here. Now, the beauty of the hammer candle, look, folks, we can't control circumstances. I can't control what the market is going to do. All I can control is the trade setup. In this case here, the trade setup is very simple. You were of the belief that buying the dips is the right thing to do out here, then what you would do is you would be buying the S&P, you'd be buying the SPY right now. Again, we're taking a look at a 10-minute chart. So you have to trade based on where your signal came in. And on a 10-minute chart, that means you would stay with that 10-minute chart. Now, if the daily gives you a different signal or gives you a reversal signal, a different story out here. But in the case of the SPYs, you got the hammer that came in. That means if at any point in time during today's trading session, you get a close on a 10-minute bar below the level of 155.31, I can promise you one thing. If you're long, you're wrong. And what that means is that the bulls are not defending a position that they should defend. And if they're not defending that position, there's no reason for you to be in there. And the 10-minute chart here of the SPYs, we can just draw a line of support across the screen. Pretty easy to do. You can see this is the level here. Be willing to move your line up and down a bit. So you can see not only is that hammer candle showing you that you've got support, but you have support here with regard to swing points and areas that were previously tested around that area. Going back to 11:40 in the morning on the 12th. Going back to on the 12th at 2:20 in the afternoon. Coming down here to 9:50 on the 13th. Today's the 15th. So on the 13th, a few trading sessions ago, a few trading days ago. Now, of course, what we also know, because of the gap down here, and this is the difference between trading the ES Mini where you've got continuous information, so you're always able to get better information with regard to what's going on in the marketplace. Right now, what we know about the SPYs is they gap down right at the open. So a logical area of resistance that you're looking for is going to be what's going to happen when the SPYs get into, should the SPYs get into that high of 155.89. That was the intra 10-minute session high coming into that 940 area. That should be an area of resistance. But really what you have to do is you'd really want to go back to the ES. You'd want to go back to keep it on par here. You want to go back and take a look at what's going on inside the 10-minute. Inside the 10-minute now, right now, just kind of hanging out and we're back to the ES Mini here, just hanging out at that 0.382 level. No bears yet showing up, and we know exactly where our resistance level is going to be, and it's going to be 1555 on the ES Mini, and that will help you to understand how to trade the SPY or how to trade the SPX U or L, whichever the letter is for the long, or, there's a number of ETFs that you can trade out there. But I suggest you go ahead and you pay for that data feed on the ES Mini. It's really not that expensive out there. And when you consider the value of a tool that you would have, you don't have to trade the ES Mini, but you want to make sure that you've got that chart and you're familiar with the chart patterns and the candle patterns and everything else that goes along with it. And look, if you want to get a feed for that, go to the homepage of TFNN.com and sign up this very second. Right now, 2 seconds from now. That means right now. You should be out there signing up for the Nadex. You should be test driving the Nadex platform. You can do more than test drive it. Put $100 down into the account just to get started with. That'll give you continuous feed information from the futures contracts that are out there. At least you'll have something to be able to gauge what's going on inside your trades out here. So the bulls are still in the town here, defending their position as they should. Easy to identify in the marketplace. And with regard to the overall, and the reason why you want to stay within that trade, where you've got the hammer candle on the ES Mini is because that's where the candle formed at. In the case of for those of you, let's do a quick update here on the currency trade on the Great British Pound out there. The Great British Pound, the actual candle in order to get into that trade was this hammer candle here. So all of my trading decisions with regard to the Great British Pound will end up coming off of the daily chart out here. My expectations, I know where resistance is. We all know where resistance is in the pound, and that's going to be somewhere right in the vicinity here of 152.67 to around 153. That's going to be an area that's on close watch out here in this long trade. But this was using the hammer candle, and then a followed up bullish engulfing candle on that very next trading session. That was March the 13th. If I'm interested, which I always am, as to what's going on the intraday basis, then I can go down and take a look at a 30. Just depends on how much of a volatility I want to be able to take a look at, because it's going to be different on different time frames out here. If we go to the 60-minute, that's where we've got all the charts out, or where I've got my charts out here. That's really what I'm paying more attention to, quite frankly, on this trade here, is the 60-minute chart than anything else. Is just simply knowing that I can erase the 1.272 butterfly. That was my first expectation. That's what I wanted to see in order to confirm for me, in my mind, that what we were seeing was a real change in trend, which was marked certainly by that hammer candle. But I wanted to see a change in patterns that were taking place, and that's what happened when we set up, well, at least that 1.272 butterfly. Now what we really got was the 1.618 butterfly. When you get to those levels, what should you expect? You should absolutely always expect for a market to do something different, whether it's moving sideways, whether it's pulling back, and the candles will give you some kind of feel for what's going on. In the case of the ES Mini coming to that 10-minute session, we did get a bearish engulfing candle and engulf the prior 3 hours out there. So for the the Great British Pound to pull back here, that wouldn't shake me out of the trade at all. I don't expect anything will ever go straight up, nor will things go straight down out there, and that's where the intraday time periods will help you in being able to just simply understand what is going on out here. In the case of the Great British Pound, we take a look at possible pullbacks out here. The pullback, a dead cat bounce down to 150. I guess I already had that in there. 150.46, which is really coming back to the swing point high here at 8 o'clock in the morning on the session of March the 8th. That would be normal. That would just simply be a normal move. We can see also the Great British Pound out here being in that overbought condition, so it needs to work its way off. Hasn't been doing a whole lot in working its way off, but that's how you go ahead and you put the trades together. At least that's how I'd like you to be able to consider putting trades together out there. Let's go peek in on some other things out here. How about let's go take a look at the metals marketplace here. Let's go peek in on gold, see what Goldilocks is doing. Gold, trading up just a tad, $15.94. That's up about $3, almost $4 here. Gold really forming a nice little bottom here. Now, what I want to see gold do, it's not going to do it today. It's trading into its most recent swing point, which was February 26th out there. That had 164,000 shares on the way up. So far today, only 62,000 shares. So it's not going to have the volume, but it's still trading inside that swing point. That's good. It's also trading inside that downdraft area from February 20th with 220,000 shares out there. But the real swing point, that's not actually a swing point as much as just a downdraft candle. But the swing point that it did trade into yesterday and had a nice little rejection was at February 21st level, 260,000 contracts. Was tested yesterday on lighter volume, 141,000 contracts. So you did get a little rejection there of price. I'm be real interested today at about 3:30 when the commitment of traders data comes out. I want to make sure that the commercials, the large money, the longer term positions in the marketplace are still net bullish out here. A level so high, so bullish that they haven't been at that level really since 2011, 2000, when the lows were made in gold, as well as 2008 out there. So a bottom is absolutely being formed here inside gold. Same thing really going on inside silver, but more conviction behind the gold move out here. Silver really trading, up about 11 pennies, so nothing more than really just a sideways move, traded out at 28.90. Let's go peek in on light sweet crude out here, see what she is doing. Light sweet crude is on its way up, probably really 94.84, maybe even, at this stage. Let's see here. Light sweet crude, this is probably headed back to 96, 93 out there. And, of course, now with regard to the commodities, I'll say with regard to oil, I think the U.S. dollar index is tracking pretty well with regard to oil out there. But it looks like light sweet crude wants higher prices. That means more for you and I at the pump. If we take a look at bonds, here, bonds now breaking out of trying to break out of the body of the swing point low from March the 8th out there. So bonds trying to put in a bottom here, and we'll see. So we got so just trade everything independent of each other. It looks like bonds are trying to form a bottom, gold and silver trying to form a bottom out here, and it looks like the S&P still wants to go tag the swing point high out there. Let me actually pull up the index. Then we'll go take a look at a couple stocks. We want to go take a look at Apple and see what Apple is doing out here. But first, let's go pull up the actual S&P. New York Stock Exchange, again, I mentioned that earlier when David had called at just past 9. And the New York Stock Exchange, which is, in my opinion right now, is showing the weakest of all of the patterns inside the marketplace from an index perspective. It's not showing any weakness here today. So I think that is a signal for us to be paying attention to. If we take a look at the S&P 500, it too really not right now, at least candle-wise, not showing any real reversal signals out here. The 1546.72, that is a key number. And if that's not closed below, you're going to see the S&P 500 move up to 1576.09 at a minimum. It wants to go at least test that level. 1559.64 is what it is trading at right now. So you've got about, 16 points to the upside, and 1546 would be about 13 points side. You could kind of say it's in the middle there. I'd say that's a pretty good call. It's absolutely in the middle. That's on the S&P. Let's go peek in on a couple of the other indexes out here. Let's look at the Russell 2000. That not showing any weakness really this morning. No bearish reversal candle yet, even at the lows of its trading session today, not showing any reversal signal there. That's in your small caps. The NDX, a little bit different story, I believe. Let's go ahead and pull that up. Earlier, it was showing at least I believe the NDX was showing a dark cloud. Yeah, it was a dark cloud cover that it was showing earlier, but not so fast, not right now. And I've got the Dow up here. So is the Dow. Well, so the Dow itself, that still looks like a little dark cloud cover to me as well, but we'll need to see how the session closes. Let's go back over and let's find the NDX first out here. There we go. So we've got the NDX, and, the NDX right now just really, that's a bearish engulfing. But that bearish engulfing there, folks, take a look at that small-bodied, spinning top-type candle from yesterday, March 14th. I don't put a lot of weight in today's bearish engulfing because it would not have taken much at all in order to be able to form that candle out there. So in the NDX, now what the NDX is doing, though, most certainly has not broken that 0.786 Gartley pattern. And for the bulls out there, you really want to see this pattern broken because the NDX will certainly help move I think it should help move the markets higher. And the NDX, if it breaks this level, not only will it head to 28.78, it will have the expansion on it, 29.82, because in the 786 Gartley pattern fails, they turn into butterflies more often than not. I guess we can call the 0.786 Gartley buy or sell pattern. I suppose we could call that the moth pattern out there because that moth usually turns into a caterpillar. We got to call it the caterpillar. What am I thinking? We got to call it the caterpillar pattern out there. That's it. That's the new definition for a 0.786 Gartley pattern that fails. That becomes the caterpillar pattern that turns into a nice butterfly eventually out there. Let's go check in on some of the stocks in the market here. Most specifically, let's go take a look at Apple. Apple up $6.60 right now. Apple trying to close above 435. That will be an important message of the markets today for sure. So we can see Apple gapping up above that level. Let's go check in on the volume, see if there's any volume behind today's move. So far, 12 million shares, so not too bad. An hour and 20 minutes of trading, and we can see all the testing that was done. And so this line here, line, which is the low of January 25th, that 435 level, that was an area of support, but really turned out to be a strong area of resistance. Now, that turns into be area of support. 877-927-6648. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour. And remember, again, it's tomorrow at 8:30 in the morning. It'll be here before we know it. Tom O'Brien and Darrell Martin doing a great workshop, Dynamic Trading Strategies, in San Mateo, California. everybody in that area, go give Tom a nice big hug. Tom and Darrell, a nice big hug out there. Get ready for a great morning of education, prizes, the whole thing. Again, all the details on the homepage at TFNN.com. Had a request from Bill in the San Francisco Bay Area inside the Tigers Den, asking me to take a look at the Bank of America. So as we take a look at Bank of America here, gapping up this morning, taking out a swing point, a small little swing point from March the 8th. That swing point has 209 million shares. The top of that is $12.44. If you get a close above that level today, maybe setting up a new A to B equals CD, because you've already done 145 million shares, so should be able to take that volume out, 209 million shares. But what we first can do is we can take a look at the resistance area. And the resistance area, if you're watching this on Tiger TV, it's a black horizontal line going across my screen. We can see that this is an area, and I term that I term it as resistance because it's where we have a number of different bearish signals. The first one really coming in here, this little evening star formation. This is a 3-candle configuration out here. The 3-candle configuration, January 4th, January 7th, and January 8th out there. That's set up at that stage, the high of January 7th as a resistance area, 1220. Where do the bears show up next? Well, the bears really show up next right here on this candle on February 15th. That's a bearish engulfing candle. That says that the session, the prior day's session, which it engulfed, the February 14th high becomes, in essence, an area of resistance, 1227. Where's the next candle that's out here? You got this little bear sash candle. That candle coming in on February 20th out here. You actually have a little dark cloud cover candle right here on the 8th of March out there. So we can see this black line going across my screen. That's really your horizontal resistance area. If we take a look at how this was consolidating really from about the time that it broke out here, makes right around December the 18th, a little bit of a gap out there. And we could draw that. I'll just color that in just for the moment here while I have time, while I look for the tool. So, well, that was the wrong tool. I just got to grab the right tool out here. So if we take a look at our consolidation box out here, it's really right about this level. So the low of the consolidation box is about $10.98. We'll call it $11. The top of the consolidation box is $12.50. So we've got $12.50 to $11. You got $1.50, and a breakout today of a consolidation says you should do another $1.50. Add $1.50 to the $12. $13.50 is what it says price should move to. Now let's take a look at the small A to B equals CD. I'm doing this live. Haven't done this. Have no idea what the results are going to be. We're going to go find out what the A to B equals CD says. A to B, the small one. How about that? $13.36 out there. So you got two confirming indicators, and $13.77 the 1 to 1.272. That's really where it looks like the Bank of America is headed to, around the $13.37 to $13.77 mark. That means, though, it needs to stay above the high of that dark cloud cover. That is 1244 today, and it needs to stay above it on more than 209 million shares. So that is for Bill in San Francisco and everybody else that is trading. Now, what's actually cool here is if you watch this, I'll go ahead and put this on a weekly chart because you got confirmation with regard to it breaking above resistance with regard to the candles that are on the weekly chart as well, because you had bears on a weekly chart showing up as well. Dark cloud cover right here the week of January the 11th, and you had a bearish engulfing right here the week of December 22nd. There it is again, 222. 222 on my mind. Folks, stay tuned. Basil Chapman will be up next. Have a great Friday. I look forward to seeing you Monday morning, and everybody go sign up if you're in the San Francisco area for the Nadex Dynamic Trading Strategies. Have a great weekend, great day, folks. Take care.